We're in the kitchen now, and when a cost segregation engineer comes into the kitchen, what is he looking at?
Well, he's looking at all the individual pieces in addition to the structure. So they're looking at the faucet, they're looking at the lights, they're looking at your refrigerator, your range, your microwave, your dishwasher, and they're calculating out the value and what the depreciation is going to be over 5 and 15 years, depending on the type. And then obviously with the cost segregation bonus depreciation, you're able to take advantage of that in the first year you buy the property and get a write-off for that bonus for the 5-year pieces and the 15-year pieces.
Why don't a lot of people do this?
It's not well known. It's a very niche, if you will, strategy that we've really focused on. Obviously, doing so much new construction, it's a huge benefit. It's also not something you can take advantage of on properties older than 15 years.
We talk to a lot of our clients who are doctors and lawyers and dentists and wicked smart people, right? Who have 13 years of schooling. When we tell them about cost segregation and their ability to accelerate that in the first year, their jaw hits the floor, right?
Absolutely. It's funny because we talk a lot about the benefits of real estate. The cash flow, the equity, the appreciation, the stability versus the stock market. And there are some clients who see the tax savings as right here, and that's just a benefit on top of it,
right.
So it's amazing what it can do, especially for a high net worth earner. It's like if you have an extra $90,000, do you want to give 25 of that to the government, or do you want to give none of it to the government by getting a tax savings like this? So the benefits are really tremendous on what you can do.
Well, and let's play a hypothetical game. Let's say you are a doctor, let's say you're a lawyer, let's say you're a dentist, and you make a certain salary every year. And you're going to have a tax burden because your income from your dental office is pretty good. You don't have anything to offset that. Now, when you buy a new construction property, talk about that. That's something you're going to want to do every year because the tax savings of a cost segregation analysis lowers your tax burden, right?
Oh, absolutely. Giving the government less money is something we all want to do. And one of the toughest things for high net worth clients is to find a way to write off their taxes. It's really hard to find that because there's so few options that give you a really good bang for your buck. You invest $100,000, you get a $70,000 write-off. It doesn't happen every day. But with cost segregation, there's really no limit to it. It's how much money you're able to invest in properties. You're going to get that write-off, whether you buy one property and you get a $70,000 write-off, or you buy 10 and you get $700,000 write-off.
All right, thanks, Josh. Awesome. Told you he's an expert on cost segregation. All right, we're going to go off to some more properties now, but if you are interested in checking out some of our new construction properties, there's a link below in this video. Hit us up and we will take care of you, and we will spend a lot of time on the phone with you talking about the benefits of cost segregation. We'll see you next time, everyone.